Well, hello everyone, and thanks for making the trek out. It's nice to see so many faces, especially after so long being cooped up. Even if most of them are covered up with masks, that's better than virtual. Just before I get started, I do want to say that I think that something important to keep in mind is I think inflation is something very real, very big. I think it's going to be a defining factor of the circumstances of the next decade or so. It's going to be a defining feature of investing. And so being here, learning about mining and commodities, I think is a very smart move for investors to look to hedge. And with that, let's get started. So my talk today is going to be on silver and how I believe it's the trade of the decade and how you can profit from it. Main 3 points I will make, no surprise, are inflation, fear in different ways, including in particular fear of inflation, and then how the green economy will help support silver. This first slide talks about inflation, but as well has an image that gives you some semblance of what's been going on. So numbers actually out this morning. U.S. inflation is actually at another 40-year high, 7.9%. Canadian inflation, 5.1%. And if you consider that you'd have to be about 10 years old to have some idea of what it was like to live with inflation, about 2/3 of Canadians and Americans have not really experienced inflation, don't know what it's like to live with it, don't know how to deal with it, how to react, and what it's going to mean for them. So to give you a few indications over the past, actually this is during 2021, clothing was up 10%, beef was up 22%, used cars up 37%, gasoline up 49%. And all of these numbers mean nothing if you consider what happened in the last 2 weeks. These numbers are actually conservative given what's taken place. So really, that's the kind of environment that we have to live with and invest in. An interesting point is that I believe official inflation forecasts are too low, often too low, and purposely too low. If you look at what the Fed, the OECD, and the IMF predict in terms of inflation, their numbers are often scaringly low. Just looking at the Fed's forecasts for 2022, this goes back to January only. Their forecast for 2022 is that inflation would average 2.6% this year. And so I think that it's fair to say that's almost a laughable number. And the Fed's notoriously behind the curve. Central planners want us to underestimate inflation, and I'll get into that a little bit later in terms of what the motivation is for that. Here's a very, very simple slide. If you look at what the actual definition of inflation is, it's an increase in the money supply. People tend to think it's higher prices for things, and that's how we realistically live with inflation. That's what everybody calls inflation, but the actual definition is an increase in the money supply. And in the last 3 years alone, the money supply globally is up 25%. So think about that for a moment. There's 25% more money sloshing around in the economy worldwide than there was 3 years ago. Now, if that's not going to impact prices, I don't know what will. Here's an interesting image. You have on the top left corner a little pile of $100 bills, and they represent $10,000. Middle right, you have $1 billion in $100 bills, and that's 6 pallets of $100 bills. $1 trillion is the image at the very bottom, and that's about 2 football fields of pallets of $100 bills. And this guy in the red t-shirt, there's a little blow up in the front, but he's actually a tiny dot in the very corner of that big image. So to give you some perspective what this means, in the first year following the pandemic, the US Congress committed $5 trillion of new spending. And so, once again, huge impact, which we're probably starting to see right now in a very, very real way in terms of how prices are being affected. On a more day-to-day basis, producer price index, this is all the raw materials that manufacturers have to buy to make things that you and I consume. In the last 2 years, their costs are up 32%. In the last 20 years, they're up 90%. And so manufacturers have to take all these input costs and they naturally pass them on to us. And so that's what we're feeling in our pockets every day. So here's kind of the crux of how all of this meshes together. I believe inflation expectations have finally shifted. By that, what I mean is it's true that a lot of people probably have a tough time really understanding and accepting the implications. But if what's happened in the last 2 weeks hasn't changed their minds, then I don't know what will. If you look at what that means is when inflation expectations shift, consumers, businesses, institutions, they start to expect even more inflation. To react to it, they try to get ahead of inflation. And the natural way to do that is to spend more quickly, to spend larger quantities of cash before prices rise even further. So what you've done is you've created a feedback loop and a bit of a self-fulfilling prophecy, and where the expectation of higher prices starts to drive even further inflation. And so you end up in kind of a vortex or a tornado, almost, if you will, of higher and higher and higher prices that just gets larger and larger as the funnel grows. And so here's a sort of a quick view of what we've been experiencing. This is a chart of US inflation over the last 20 years. And this last little bit that's highlighted in yellow is how inflation has jumped from nearly zero in late 2019, early 2020, to 8% today. And again, these are just the official numbers. Speaking of official numbers, if you look at what others calculate, there's an economic research group called Shadow Stats, and they actually calculate US consumer inflation based on the 1980 method that the US government originally used. And on that basis, inflation today, official inflation at 8%, is actually closer to something like 15 or even 16%. And I don't think anyone who puts gas in their car, does groceries, would think any different. So this kind of leads back to what I was saying earlier about how where official inflation is reported as low, and the intention is to keep us from getting too worried, getting too excited. Workers, when they see higher costs for things and their employment contracts come up for renegotiation, they start to ask for higher wages. Naturally, especially it's a competitive job market right now, that makes things worse, it compounds things. Higher wages funnel down to the employers, that makes for higher costs to them, that leads to even higher inflation, and as I said earlier, end up with a vicious spiral upward that is really hard to break. So how do you deal with it? Well, if you look at what's happened in the past, silver is one of the elements, one of the investment options that you have that has tended to actually dramatically outperform inflation and other assets, and it literally, almost quite literally, crushes inflation. Here's an interesting chart that compares silver, gold, the Dow, and the S&P. So the blue line at the very bottom actually covers a red line, and that's the Dow and the S&P during the 1970s. Those indices were, over that entire decade, were essentially flat, again, without considering inflation. Gold was up 14 times in that decade. Silver was up 37 times in that decade, outperforming gold 2-to-1 and more easily. If we look more recently, since 2000, quite sure if you ask the average investor where has been the place to be to get returns on your investments, the almost universal answer would be stocks, and stocks have done okay. Even to today, even after the recent pullback, stocks are up about 200%, not bad in 20 years. But that answer would still be wrong because gold is up 500%, silver's up 375%, And again, historically, silver outperforms gold in bull markets, and so silver has plenty of catching up to do, likely to easily outpace gold as we go forward. Let's look a little bit at the nuts and bolts of silver. Silver is a market that's very supply challenged. Silver supply peaked in 2016. Mine supply specifically, it started to drop for 4 years, bottomed in 2020, affected by COVID in particular. Lots of mining restrictions kept from normal output. And it's forecast to grow over the next few years, but it's also going to likely peak again, at most at the 2016 high. And so supply of silver from mining, again, is highly challenged. Next 5 years, we don't expect to see a new high in silver supply. Silver demand, about 50% of silver goes to industrial applications. That includes things from the green economy like solar panels and EVs. About 22% of demand for silver is physical investment. And we've seen that exploding over the last 2 years. And we'll talk about that a little bit more in the next couple of slides. Some of the silver's industrial applications are solar panels that are the single largest consumption of silver. That's 10% of all silver goes to solar panels. And that's expected to grow dramatically despite huge growth over the last 20 years. All part of the green revolution. Automobiles account for about 6% of silver demand. Expected to grow about 50% over the next few years. Electronics are about 5%, expected to grow 50% over the next about 8 years. And medicine is a long-running application for silver. We certainly have seen all kinds of reasons to look to limit the effects of medical issues. And so silver is great at killing bacteria, limiting infections, and so you see it applied to all kinds of equipment and all sorts of other medical applications. On the demand side, just numbers, so to speak. 2021 saw a big increase over 2020. Industrial demand, the largest portion, was up 8%. Jewelry up 18%. Silverware up 25%. And physical investment was up 32%. So that tells you people are starting to flock to silver. They see the need to help protect themselves from inflation and from chaos and all sorts of uncertainty. And so this year, despite the large increase in 2021, silver demand is expected to grow an additional 8% overall to 1.1 billion ounces and set a new record for consumption. And if you add all of the different demand aspects of silver, things like medicine, other industrial applications, the green economy, investment, ETFs, and so on. Right now, we're at about 1 billion ounces per year of silver demand. If you add all of these together with the projections, we're looking at about 2 billion ounces within the next 30 years. It's almost certain mining will never manage to double and meet these kinds of demands. And so with much higher demand and limited supply, there's only one way for the silver price to go. I like to say silver is sticky money. This chart shows the blue shaded area goes back to 2008, but 2006 is when the first silver ETF was created. It's easily the most traded physically backed commodity ETF, silver is. And interesting to note is that as ETFs have accumulated silver to back their shares, those accumulations have almost never dropped off. They've consistently grown, even when silver prices backed off dramatically. Even then, there were only sometimes small drops in the accumulation. And as you can see, that blue shaded area has continued to grow and grow. So for all practical purposes, this becomes silver that comes off of the market. And right now, silver ETFs hold about 1 billion ounces of silver. That's an entire year's supply of silver. In fact, it's over 1 billion ounces. Silver ETF demand was up 300% in 2020. It was up another 15% last year. And physical investment is forecast to grow about 13% again this year. Silver is cheap. And so if you're looking to place your investment dollars, looking for a bargain is always a good way to buy low and sell high. Silver is the only metal that is still below its 1980 high. All of the other base metals, the major base metals, precious metals, even some specialty metals are up anywhere from 30% to as much as 600% and more. Silver is still 50% below its 1980 high. If you consider silver on an inflation-adjusted basis, the $50 high in 1980 versus today, silver is about 85% below its 1980 high. And so I've been saying that silver performs well against inflation and in bull markets. Let's look at what it's done in the past. The Dow to silver ratio tells you how many ounces of silver it takes to buy the Dow. In the 1970s, there were two major waves down in the ratio, meaning silver was gaining versus the Dow. That ratio bottomed at about 24 in 1980. I believe we're in a very long secular bull market again for silver that started in 2001. That ratio bottomed at about 300 in 2011, rose again, and I believe we're in that second wave down starting now. And I think that the ratio can probably bottom somewhere, I believe, conservatively around 100. And if you use a Dow of, say, 30,000, and on a 100-to-1 basis, that projects, for me at least, $300 silver, which is where I believe silver will ultimately go. 1970s produced, as I said, a 37-time return in silver. The 2001 to 2011 period produced an 11 times return in silver. And as I say, I believe silver is the trade of the decade. Since 2020, so this decade, silver has been outperforming gold nearly on a 3-to-1 basis. Just this year, silver has been outperforming stocks. Silver is down 9%. Sorry, stocks are down 9%. Silver is up 9%. That's an 18% outperformance. I expect that's going to continue. And silver's breaking out. If you look at the weekly price of silver, going back a couple of years, silver has now broken out above its 50-day moving average. It's well above its 200-day moving average. And this long consolidation period that we've had over about a year and a half looks like it's coming to a close, and silver will likely start to set new multi-year highs. And I believe that the acceptance, by the general public that inflation is here to stay and that they need to find ways to deal with it is going to find its way into silver and start to help push this metal and the investments related to it much higher. So if it's the trade of the decade, how do you profit? There are multiple investment options. You have physical silver, of course, coins and bars. Right now, however, premiums on these are very high. They have been for a couple of years. They're about 30 to 40%, where they normally are about 12 to 15%. Your next option is physically backed silver ETFs. My preference in this space is the Sprott one, given how it's built. And then you have silver miner ETFs, royalty and streaming, and everything down to junior explorers, which we'll look at a little bit more closely, given our presenters today. In 2016, the early part of that year, the first half, there was an 8 times leverage of junior silver stocks over the price of silver. And this is a basket of junior silver stocks. Silver was up 40%. This basket of junior silver stocks was up 320%. More recently, since February, the start of February this year, silver is up about 11%. Silver juniors are up twice as much, about 22%. And so to kind of wrap things up, I've been saying inflation is a defining feature of the next decade. When it comes to looking to protect your portfolio, silver is certainly a dramatically efficient way to play that. It's, I believe, as well, silver and inflation will be the trades of the decade. There's a powerful motivator, both from geopolitical instability, but certainly from inflation. And the green economy, I think, will help to provide a rising floor under the silver price. So just to sort of quickly wrap up, a little bit about me. I've been researching, writing, and investing in precious metals for the last 20 years. I write the Silver Stock Investor newsletter that's exclusively silver focused. It's all about what I buy and sell with my own money. And it covers the full risk spectrum, everything from silver ETFs to junior explorers. It's again aimed at new and experienced investors, and it covers everything from low to high risk investments. It's published by Resource Maven, and we're independent and supported exclusively by subscribers. And then on a final note, I'm working on a book that's due out in a couple of months, aiming for mid-May, called The Great Silver Bull. And I think you'll find a compelling read there on the entire silver opportunity. And if you want to know more about the newsletter, please go to silverstockinvestor.com. Thanks very much.